lower mortgage rates, a banking crisis, the Fed changing their tune, and existing sales are up. Let's get into it. Mortgage rates have been hot the last couple of weeks due to these inflation and economic indicators, but also due to the banking crisis that's going on, which we're going to talk about in just a minute. But listen, if you're a buyer that has been waiting for the right time, existing home sales are going up, which we're going to talk about in a minute. And with rates going down, it is just going to drive more demand. So if you've been looking for the right time, the time is now. So what's clearly not working well right now is our banking system. Now, I don't think this is necessarily a crisis, but there is more to come is my guess, because Signature Bank and Silicon Valley Bank, these are not the only banks that were invested in bonds. There's lots of banks that invest in bonds, U.S. Treasury bonds and mortgage-backed security bonds, which are normally a safe investment. But when the Fed is rapidly increasing rates, it decreases the value of those holdings, which puts them a little upside down. So we have to realize that the Fed is basically the cause of what we're dealing with. Now, they had to deal with inflation, but they should have been dealing with it far before they have, and they wouldn't have had to have increased rates as much as they did. So that is really what's ultimately causing this. And where there's smoke, there's fire. I think we could see some more institutions being impacted by this, but I don't think it's going to wreck our economy. And the good news for buyers and sellers out there is that it's helping mortgage rates, because you have all these investors that have been looking for reasons to get back into bonds and looking for these bonds to be a buy. Well, now that these value of the bonds have gone down so much, they are attractive, and they're a flight to safety for many investors. So that's why we're seeing this decrease in mortgage rates. So what's next? Circle May 10th on your calendar. We think that's going to be a really potentially favorable mortgage rate day, so watch for that. And in the meantime, we have existing home sales for the month of February. We're up 14.5%, and this is exactly what we've been pointing to. Activity is up. Mortgage rates have been on the decline, and we think that's going to continue, which is just going to cause more activity and more competition. So if you've been on the sidelines, don't miss this opportunity. Get in there, take advantage of these price declines, because they're not going to last much longer. Thank you so much for watching. As always, for quick pre-approvals and answers on scenarios, you have my contact information. Reach out anytime. We are here to support you.